Joining us now, we've got Jeffrey Small, president of Arbor Financial. Jeffrey, good to see you. Haven't talked to you in a while. Let's frame the setup for investors today. What do you think is the single biggest thing or metric to pay attention to today for Tesla?
Well, I don't think anybody cares about cars, Diane. But by the way, nobody gets me up this early, so I'm glad to be here with you. I think what we're really concerned about is, are they going to beat today? And so, have they been able to manage costs correctly on the automotive side? Are margin risks real? Are they materializing into more profitability? Any of those things could cause a big miss for Tesla today. And if they outperform, I think there's a 60 to 55% chance we could see a beat on all of their numbers today going forward. But more importantly, Diane, who cares about cars? We want to hear about AI. We want to hear about the guidance and the robotaxi and full self-driving and what the expansion plan is going to be. And more importantly, we know the potential market for robots is over $10 trillion on Tesla's side based on what they've told us so far. And so we want to hear about advancements in that side. So, any kind of weak guidance could cause the stock to really, fall very quickly.
Okay, so I know we want to hear more about that because there are those who obviously argue that Tesla is not a car company. They either argue that it's a tech company, it's an AI company, it's a, future of mobility company. Really quickly, before we dive into a little bit more of that, don't the cars still matter in the sense that, one, listen, they need the money from that essentially to fund the vision for the future. And then two, do you think that this could be a strong quarter simply for the fact that, we've seen other car makers do well in EV because of people rushing out to buy them ahead of the sunsetting of that EV tax credit here in the U.S.?
Yeah, you are correct. They had a record delivery last quarter, second quarter, 497,000 vehicles. What would be a beat this year in the third quarter? Anything over 470 is going to be considered a beat. They are projected to do about 1.1 to 1.2 billion of free cash flow. So profitability, to all your points, Diane, is very important that we see forward progress in all those areas. And what they're lowering price, we really see some lowering the price on their vehicles. We really see some demand stability coming back into play and the potentiality of sales reaccelerating in the automotive realm next year going forward, as long as Elon can stay, focused on business and be the great builder that he is.
Okay, so over the past several months, Tesla has made quite the comeback in terms of its share price compared to where it was sitting earlier this year. And obviously, it wasn't just about tariffs. Part of that had to do with its Elon Musk relationship with the government and then some of the, political stuff overseas. But okay, that seems to be in the rearview mirror now. And you say the future is obviously all about, AI, robotics, et cetera. How much weight should investors put on that?
Well, I think that any information that is not beneficial in those categories as a transformative company in AI and the enormous potential of full self-driving, energy storage, and robotics through the Optimus, and being able to scale the robotaxi quickly is going to crater the stock. And so, investors are really hoping today that they hear some positive guidance on the expansion of robotaxi. And as long as we can get away from, maybe Musk's goal was by the end of 25, get away from having safety drivers in the vehicle. Right now, we're in San Francisco and Austin. They've expanded the geofence in Austin pretty dramatically. But we're looking, and they've got ads in different cities across the country for future drivers. And so, we want to hear some good news on that. That's really what we want to see the expansion on. And so the metric for, let's say, their stock valuation, technically is overvalued a little bit, probably a lot. But, as long as there's good news every quarter on these fronts, you're going to see the stock price continue to expand. That's just the reality of what we've got, Diane.
Is it overvalued, though, because of, there are some who still value it as a car company?
Well, yeah, of course. Would it be at $445 a share this morning if it was cars only without the AI inferences? I don't think not. I think we'd be closer to, 150 today, Diane, honestly, as just a car company. And so it's really the AI that is giving us that rush in share price. It's giving us that share price high, so to speak, as speculative investors see this as the ultimate growth play out of the Mag 7 companies as one of the most transformative AI disruptors out of the Mag 7. And so, when we look at Tesla, they're in the Mag 7, but they have the weakest fundamentals. the weakest profitability, but the best tech going forward. And so the best chance for, massive explosion in tech. And that's really what Tesla has. And Musk has that mystique about him, as the great builder. Everything he touches turns to gold.
And then let me ask you this, how important, because this has been growing their energy storage and their battery business, how important is that in terms of the future of Tesla?
I think it's very important. But I think going forward, when you look at Tesla over the next 3 to 5 years, batteries, automotive, self-storage might be 25% of what the company could potentially generate in terms of their top line and their bottom line numbers. I think the real key to Tesla's growth going forward financially is going to be in the robotics sector for probably 40 to 50% of that number. And then the rest will come from full self-driving. Another 30% from full self-driving. When you look at the valuation breakdowns over time, if they mature correctly.
Okay. And then one more question for you. I want to go back to the what you mentioned about the future of Tesla, the, robotics. The view on what Elon Musk projected about, how much total addressable market there is, especially related to that, seems to indicate that he sees more than one humanoid robot in every household. Is that really realistic?
Well, Elon likes to promise the world and say lots of big things, but they have to materialize, right? And so I don't think it's realistic. Would I love to have, a handyman in my late 50s on deck at full time for 25,000? Of course I would. That would be great, to lift up boxes and, clean the sliders and all that kind of stuff. So we don't know what's possible yet until we see the first variation of this coming out.
Yeah, I mean, wouldn't we all like a Rosie the robot? That is a fair point there, no matter the age, I think. All right, Jeffrey, we'll leave our conversation there. That's Jeffrey Small, president of Arbor Financial.